This was me and my husband 6 years ago, but more importantly, we were very much in debt. But over the years, we have not just paid off the debt, but we have built up what I would personally consider a rather healthy investment portfolio. And today, I will be revealing to you what it is consisted of. I strongly believe that the more awareness we bring to how one manages their money, the better we all can be in managing our own finance and become financially secure. Financial education is probably one of the most important education that we can all have. And personally, I do really enjoy talking about personal finance, listening to other people talking about their finances so that I can learn from it and see what I can take on and apply to my own financial situation. So this goes without saying that this video, the purpose of this video is purely for financial literacy and not intended for anything else. Another thing I need to mention is that I'm not completely 100% comfortable of revealing how much each of these assets I have down to the pennies. But in this video, what I will do is I will show you how much each of these investments in proportion to my entire portfolio based on their current valuation. And at the end of the video, I'll tell you roughly how much the entire portfolio is worth. I am also not a financial advisor, so what I am sharing with you today is what I decide to invest for myself and not to be taken as a financial advice. In no particular order, I would like to start off with something that I believe we are all familiar with, which is pension. Now, this is a standard workplace pension in the UK. In the US, there is something similar called 401k, and in the UK, pension is normally on a salary sacrifice basis, which means that the pension amount gets deducted on my gross pay before any tax deduction or national insurance deduction. For the past year, I have been contributing 10% of my salary to my pension, and my employer is also contributing 5% of my salary into my pension. It hasn't always been like this. My previous contribution has always been around 3% to 5% in the prior years, and the employer's pension contribution has always been 3%. However, in the past year, I have increased that quite significantly because I do need to grow that pension pot to the size that I want. With that in mind, I am also planning to perhaps increase the contribution from 10% to maybe 12 or 15% in the coming years. Now, I think in the UK, there's two types of pension contribution, and one is called defined contribution and another is defined benefit. And just for clarity, this pension is defined contribution, which means that the pension contribution that I personally contribute and the employer contributes gets invested in a stock market, and therefore the value of the pension funds goes up and down based on how the market is performing. And at the moment, with the current pot value, the pension is worth 25% of my entire investment portfolio. The next one is an investment in exchange traded funds or ETFs, and I'm investing via stocks and shares ISA account. And just in case you're new to the world of investment in general, an ETF is a type of investment fund that is designed to track the performance of stock market or other financial index. And really the main reasons that I prefer to invest in ETFs rather than investing in individual stocks is that because of their, first of all, simplicity, and because ETFs hold hundreds of individual stocks and bonds, helping reducing risk and making them ideal for long-term investment. Now, the way that I feel about investing in individual stocks is that you always need to buy low and sell high, right? So not only you need to know when to buy at a good price, you also need to know when to sell at the right price. And honestly, I just don't have time or emotion to be putting towards monitoring them on a daily basis. So ETF works fantastically for me. However, although I am very happy with the method that I am investing, the platform I am investing through can be improved. The platform I am investing through at the moment is Hargreaves Lansdown, which charges 0.45% annual management fees, and every time there is a buy or sell transaction, the charge is £11.95 for every dealing. And the way that I invest in ETF is that I have set up an automatic transfer transfer. So every time I get paid every single month, there is transfer from my bank account to buy more ETF. So I would essentially be paying something right around £50 per year. However, it is important to note that this portfolio will grow into something much bigger. If I will hold this portfolio for another 30 years, it means that this will cost me a couple of £1,000s. So at the moment, I am looking into another investment platform called InvestEngine, which offers really low management fees, and that's something that is really important for a long-term ETF investor like myself, and potentially for you as well, especially if you invest by buying more ETF on a monthly basis like I do. InvestEngine offers 0 management fees and 0 dealing fee for do-it-yourself portfolios. InvestEngine also has over 250 ETFs for you to choose from, with good range of world index, FTSE, S&P, and also funds from leading brands such as Vanguard and iShares. So there is something on the platform for everyone. Hargreaves Lansdown is authorized and regulated by the Financial Conduct Authority, and so as InvestEngine UK. The main benefit that Hargreaves Lansdown has is that it has been around for longer, while InvestEngine is the new kid on the block. However, if your investment plan is to just invest in ETFs, which can make InvestEngine a pretty interesting investment platform of choice. And at the moment, based on current market value, my ETF makes up 7% of my entire investment portfolio. And although the stock market has been pretty volatile recently in the year 2020, there is another asset in my portfolio which is even more volatile, and you guessed it, cryptocurrency. And I really do believe in the technology, and the ones that I choose to invest on is not something fancy, so it's just your standard Bitcoin and Ethereum. So at the moment, cryptocurrency makes up of 17% of the entire portfolio. Now, the next investment asset is something that you're looking at right now, which is the house. If you haven't checked out my buy versus rent a home video, you might want to check that out, because not every home purchase is considered an investment. However, when we bought this house, we bought it with an investment in mind. And this house makes up the biggest chunk of my investment portfolio, which is 48%. And again, this is based on the current market value of the house. Obviously, the value of the house in London normally goes up, and the way that I calculate the current value of this house is I take my equity minus any cost that goes into doing up the house, for example the kitchen, changing the doors, doing the garden, and the legal fees involved in purchasing the house. And obviously there was a down payment that goes into this house, so I consider that as an initial investment, if you will, which we're not going to talk about it in this video because we are just talking about the current value of the investment. With everything broken down, I can say that the total investment portfolio that I have is between 70k to 80k. Again, I am not completely comfortable of telling you the exact amount. Maybe one day I will, but what I can say is it could actually have been worth more than this. The stock market has been underperforming recently, as well as cryptocurrency, so actually my investment in pension, ETF, and crypto has actually gone down. The only thing that sort of help is the investment in the house that hasn't really gone down. So this is why it is important to diversify when you have an investment portfolio. Now, none of this would have been possible if I didn't see the importance of saving the first 100k. And if you're not there yet, I would really recommend you to watch this video next, where I talk about how me and my husband saved for our first 100k in a few years time. I'll see you there.